gold prices surged past $3,000 amid global economic and geopolitical turmoil. Full investigative report. Rethink report. Global markets are in turmoil as gold prices have surged past $3,000 per ounce, reaching an all-time high. This record-breaking rise is driven by economic uncertainty, geopolitical conflicts, and concerns over a weakening U.S. dollar. Investors are fleeing riskier assets and turning to gold, long considered a safe haven during crises. This report will examine what is driving the surge in gold prices, how global instability is impacting financial markets, and what this means for the economy and consumers. The $3,000 gold boom. What's happening? Gold has been steadily rising for months, but in the past 24 hours, it broke past the historic $3,000 mark. This represents a nearly 25% increase since the beginning of the year, with some analysts predicting it could climb even higher. Financial experts point to three major factors behind this surge. Global instability has driven investors away from stocks and fiat currencies, pushing them towards safer assets. The U.S. dollar is showing signs of weakness, with inflation concerns and shifting Federal Reserve policies making gold more attractive. Central banks and major investors are stockpiling gold as a hedge against economic collapse, creating a supply and demand imbalance that is driving prices higher. How geopolitical conflicts are driving gold prices. The surge in gold prices is directly linked to the instability unfolding across the world. The war between Russia and Ukraine continues to disrupt global markets, with European nations struggling to secure energy supplies and economic uncertainty increasing. The ongoing crisis in the Middle East, including the recent collapse of the ceasefire in Gaza and escalating Israeli airstrikes, has added to global concerns. Trade tensions between the United States and China, particularly over tariffs in Taiwan, have put additional pressure on supply chains, further destabilizing the global economy. Market reactions to instability are often driven by fear, and gold remains the safest asset during times of crisis. Every major geopolitical conflict in modern history has led to an increase in gold prices, and the current situation is no different. Investors and governments are reacting to the uncertainty by moving away from volatile markets and towards physical assets that have historically retained their value.
The economic fallout, what this means for you. The record-breaking rise in gold prices is not just affecting investors and financial institutions. Consumers and businesses are already feeling the impact. The cost of jewelry, electronics, and medical equipment is expected to rise as gold becomes more expensive to source. Currency devaluation, particularly in nations heavily reliant on the US dollar, will make imported goods more costly, increasing the financial strain on households. Inflationary pressure is also a growing concern, with central banks facing renewed pressure to raise interest rates in an effort to stabilize the economy. Financial experts warn that while gold prices are soaring, the economic uncertainty behind this surge could lead to broader instability. If inflation continues to rise, consumer spending will slow, leading to a potential economic downturn. Businesses that rely on gold in manufacturing may be forced to cut production or raise prices, further straining global supply chains. What's next for gold prices? Some analysts predict that gold could continue rising, with projections suggesting it may reach $3,500 per ounce if economic and geopolitical uncertainty continues. Others caution that the market could see a correction if inflation stabilizes and central banks regain control over interest rates. While the future remains uncertain, what is clear is that gold's surge is a reflection of the deep instability facing the global economy. Governments and financial institutions are preparing for prolonged economic challenges, and investors are watching closely to see how markets react in the coming weeks. Conclusion: the new global economy. Gold's surge past $3,000 is not just about precious metals. It is a clear signal that the world is in economic and political crisis. Investors are moving away from traditional financial markets, central banks are adjusting their policies, and global leaders are preparing for a period of prolonged uncertainty. The financial landscape is shifting, and the impact will be felt across industries, markets, and everyday life. Follow Rethink Report for ongoing updates on this developing financial story.